thoughts just in terms of other macro trends before we get more into the equity stuff. Um, just your thoughts on what inflation's been doing in terms of the numbers that we're seeing roll through. Your thoughts on just the economy in general, the recession, these things coming. I mean, I know we just touched on it a little bit, but just in terms of where inflation's been and where we see that it's kind of going. I mean, what are your thoughts on that trend line there?
Yeah, I mean, well, it does relate to housing, right? Because shelter's a big part of inflation, and it's hard to see. It's hard to see how you can break inflation unless you really break housing in terms of just aggregate pricing, and that itself also creates credit contraction. It's funny. I had somebody. People keep on referencing home builder stocks. Right? Look how well they're doing, and that's a sign that things are just great. And credit to somebody who follows me on Twitter who made this point, and I put a chart of it. It's like home builders did really well in 2008, right, up until like October, and then just fell off the cliff. So my point is that more of a side note, but some of these things that people reference tend to not have as much predictive power as you might think, even though logically you think if home builders are doing well, it means housing is not going to break. It may end up not being the case that's how it plays out. But on inflation broadly, so I just submitted a piece for Seeking Alpha, emphasizing this point that I still think we're in a potential setup for shockingly fast falling inflation that might result in outright deflation, which is not inconsistent with my view that I said at the start of the year that you have a melt-up dynamic and then a credit event, because a credit event means widening credit spreads, a disinflation, deflation pulse, and a period of falling prices because maybe there's a recession still out there. The thing with duration crises, which is what happened last year, where very long duration got just utterly destroyed, is it's only a matter of time until the rollover of debt by companies into higher yields makes it more likely that they won't survive, which is also kind of a deflationary, disinflationary dynamic. Debt becomes deflationary when you cannot issue more of it. Like the discussion of how debt plays into inflation, deflation is a function purely of can you keep on rolling it over. The moment you can't keep rolling it over, now it's a burden, right? Because now you can't finance it with cheaper capital, and that interest expense becomes a bigger portion of your overall business expenses. So my point in saying all this is that you had a duration crisis. You have trillions of dollars of loans that have to be rolled over next year. I find it hard to believe that a lot of these businesses that got used to zero interest rate policy and survived, the so-called zombie companies, can necessarily survive considerably higher rates than when they first did their debt issuances. All that is a recipe for disinflation, deflation. Now, by the way, I'd argue that the Fed actually wants to see a period of deflation, which is counter to most people's thinking, because if you're going to try to get back to the long run average of inflation being 2%, right, which is what the Fed would love to see. Okay, well, if you're going to have a long run inflation rate of 2%, you have to go past 2% on the downside. You have to smooth out the advance above 2% to get back to the average of 2%, which means you have to go below it, even have negative inflation for some time, which is again deflation. So I do think the inflation narrative is going to end up proving out to be perhaps a wrong one. The question is when. And I don't know the answer to that, but I do believe that when everybody thinks one way, the payout is betting the other way.